So, sir, welcome to our discussion. So, if you have any
Hi, good afternoon.
questions, yeah, hello, sir.
Hi.
Nice to
So,
connect to you. Yes, sir.
right. So, I was listening to Srivasan. So, a good discussion. I think it totally, I'll give my inputs on how I design my strategies and everything. So, my basic focus is, to first to identify what I want to do in markets, whether it has to be sophisticated or it has to be simple. So over the years, I have drawn one conclusion, which is that simple things work, and I don't look to complicate them. So a simple example will be your 920 straddle, but I'm not doing that. But to point out, the system, since I think are talking about option trading on index, automated system that I am running is which takes into account relative strength of the indexes intraday. So what does that mean? Basically, whether your Nifty index is stronger during the day or your Bank Nifty is stronger during the day. So there is a basic thing in market when it is trending up or trending down. That let's say we have two options. Let's say Nifty is stronger and Bank Nifty is slightly weaker, or in whatever metric. We'll discuss different metrics on how we can conclude that. So let's first assume that, let's say, Nifty is stronger index and Bank Nifty is the weaker index.
Sir, do
So
you have
what is
any
that?
screen to share, and do you want some permission to share screen or anything like that?
I have a PPT of old time, not for today.
Okay.
I can share that if you want
Should
me
I
to.
provide you permission for sharing the screen?
Yes.
Yeah, I'll just give you the permission. So I'm making you the host, so you can share your screen, sir.
Sure. Got it. Screen is visible, right?
Yes, sir. Perfect.
And what is it showing? I think nothing, right?
It's showing the Windows, the plain Windows desktop.
Great. So this is the slide. So I was looking to do a short strangle. Let me just on this topic I was starting on. First of all, like I was saying, that whether today Nifty is strong or Bank Nifty is strong. So let's say Nifty is strong today and Bank Nifty is weak. So what is the general perception among traders? Let's say Nifty is going up, Nifty is up 100, Bank Nifty is also up 100. The general perception is, let's take a long in Bank Nifty, right? Because the Nifty is already up and Bank Nifty will do a catch. That is the general perception, right? Even if we take into account that, okay, Nifty is up 200 and Bank Nifty is again up 200, then people will look to do a long on Bank Nifty only. So, I mean, that is our nature. And
where is this background sound coming from? Is it from your side or somewhere else?
Must be from my side. There is
Okay.
some.
Okay. Fine.
So I was saying that that is our nature. But what should be done is, if Nifty is strong on a particular day, we should be looking to buy Nifty. If Bank Nifty is strong on a particular day, we should be looking to buy Bank Nifty. So from this basic idea, I came into. I mean, like there was an idea in my mind that, okay, why not? Instead of buying it, let's use this system for writing options. And to counter it, or balance it out, the view can always go wrong. That, okay, Nifty, I mean, there was a couple of things that can be done. If Nifty is strong, you sell the Nifty put. If Bank Nifty is strong, you sell the Bank Nifty put. But what is the counter force to that, to make it a straddle? That if things remains in a range, or things go together in a range up, or together in a range down, how do I manage the PNL of that thing? Because one is strong does not mean that you sell the P and you stay out of it, right? You have to sell the other leg also, or make it a range trade. So on that note, what I started to think was that, okay, if Nifty is strong, I'll sell the put of Nifty. If Bank Nifty is strong, I'll sell the put of Bank Nifty. So based on that, for other indexes,
so basically, like, you don't take like both the legs. you just choose the leg depending upon the strength of the index.
I'll be taking both the legs. One leg will be short put on the stronger index, and other leg will be short call on the weaker index.
Okay, got it. So
you
will have simultaneous positions both in both the indexes as a kind of balancing act. You will choose which is strong and which is weak. So overall, even if there is a movement in one index, there may be some buffer because of the positions in the other index. So it's like kind of you're having straddles or strangles, and you're having a strangle in but inter-index. Okay.
Yes.
That's
so
smart.
that was the idea that if Nifty is strong, then I'll sell the put. Obviously, then Bank Nifty is weak, so I can sell that call also. So that makes it a strangle. Then how to trade it? So that is the whole idea. Then how to trade it or how to convert into a tradable form was to look to sell equal premiums on both the legs. If I'm selling, let's say, a premium 5,000 rupees on Nifty, then I should be looking for a strike which has an equal premium of 5,000 rupees on Bank Nifty also. So making collective premium together as equal. And then I did the basic back. I mean, not I, my team, my guys did the basic back testing on previous data, and it was found out that this strategy is more profitable than having a simple strangle on index. So this was for 2019. This is for 2020, and considering the days where VIX is greater than 25,
less than 25.
Less than 25, and this is all days. So basically, it does not even matter if VIX is about 25 or less than 25, because when VIX is high, the the sold strike moves far away. So that is there. Then it was showing out good results, and I have been running it from 2021 January. So it's live for like a year now, and implementation was done, like I told you, identify the weak and strong, and then sell equal premium on both the sides. So it's not, I mean, I don't call it a algo, but it is a automated trade execution, so to say.
Okay, so currently you are executing it manually, sir?
No, not manually. It is done automatically. Execution algo is there. Okay. So basically, what it does is it takes into. I mean, I hired a guy who codes in Python. I told him my strategy that this is what needs to be coded. So there is an input file in Excel in which I have to change the values if I want to. That is, variables will be the premium that you want to sell, the number of lots you want to sell in Nifty and Bank Nifty, and the time that you want to sell.
So is it via Zerodha API, or how are you handling? Okay.
It is via Zerodha API, and it is connected to that. Then, I mean, the basics are editable in Excel, and rest is, it takes, I mean, I usually have to only change the lot size as per the risk appetite that I want to go with. So it's running there. It's live. Earlier it used to have stop loss market orders. Then that thing was removed. Then now it is having stop loss limit of 10%. Set a buffer as that limit, and then a 10%.
10% for whole position, or it's like one limb only?
For both the legs, the stop loss orders are there in the systems. Let's say the stop loss is at 170 rupees. So a stop loss trigger will be 170. Stop loss limit will be 187.
So the orders are sent to the sent to the broker, or you have it in your system and it will wait for execution?
It is sent to the broker system.
Okay. So while the order is punched, the stop loss is also set. You will not wait for. Okay. So even if your algo kind of like goes if there is some connectivity,
errors. It throws errors on Telegram. There is a bot that alerts me for all the executions that are done, order taken, exit done, and if manually something needs to be done, then also it puts out a message that the stop loss order has not executed. Kindly look at it manually. So that is also being taken care. Then I think you were discussing about better execution that can be done in such systems. So I think that is not a problem for people who have small accounts or relatively smaller accounts which cannot move the prices. So it is a problem for people who actually have such a large account that their orders will move the market. So they will be needing this Greek soft kind of softwares for executions. So I think that takes care of execution very well. And
Can you say the name, sir? Name again?
Greeksoft.
Okay.
So they are basically execution platforms only. They will provide you better spreads, better execution. They will only execute when the predefined spread limit is available to be executed.
So it will kind of calculate the fair price, right price for the underlying.
No, not the right price. But let's say you want to execute a spread. That, okay, you want to buy 70,000 call, you want to sell 17,200. And you have defined that, okay, there should be a maximum spread of 70 rupees between that. So it will give you 70 rupee execution.
Okay.
So whether the market moves up, then it will give you, or it goes down, then it will give you that exact execution that you want to achieve. Because manually, when you do such kind of trades, it will automatically be having some difference, and that some difference can be 10% in the blink of seconds. I think that you bought the call, when you go ahead and convert into a spread, the prices have either fallen or risen. So that can always happen doing manually. I think Zerodha provides a feature basket orders in which you can upload such orders, and that can also take care of it. So yeah, that's there. And why I have done automation for this system was simply that I want to execute both the legs together at the same time. Because let's say manually, if I execute Nifty and Bank Nifty moves by that time, then the premium sold will not be the same. Or I mean, I don't want any advantage or disadvantage from the execution part, because both needs to be completed at the same time. So that's there.
Again, it would be difficult to track two different indexes and find positions also, because
I mean,
the
if
moment
rules are defined, then there is no need to do it manually. So this system, from the start only, I never executed manual orders. Straight away I started with automation, and because the challenge of course is visible, that you have to first track it, then you have to do manually order punching of one in Nifty, one Bank Nifty, then put stop losses and calculate the stop loss value. So a lot of headache that is basically unnecessary. Then a simple equity curve is also, this is since live results. Then decent average profit per lot, and average loss is also decent. Probability of win is high for such system, because it is simply a straddle. Then max loss is also known. So this max loss figure, I have observed that it will happen like 4 to 5 times a year, when both the legs will hit stop losses. Then max gain will happen usually on a Thursday, when both leg goes to 0. So this is old data, I think, compiled till October or November.
Okay. That's quite interesting. So how did you come up with this idea? How did it strike to you that, okay, by
the idea was out of this relative strength only, that I used to tell people, or tell myself, or tell the guys in TraderClub that, okay, Nifty is stronger today, let's not look to long Bank Nifty. If you want to do a long trade in index, then do it in the stronger index. Then it is very old idea. I mean, 4, 5, 6 years old idea, which then suddenly everyone was doing option writing. Then I thought, okay, how can I write options? Then I thought, okay, this is an idea which I am tracking, and I think this should have something which we call as that there should be some edge doing this, because selling 920 is also its edge is different, that the market is going to remain in range for longer period of time than to break out of the range. That is its edge. And for this, the edge is that, okay, one index is strong, one is weak, combined with the 920 system edge. So it takes into account for both of them. So I think I went with the edge, then the data confirmed it, and then it was all done with. I think this back testing to live trading all took, I think, less than a month to complete.
That's really great, and thank you so much for sharing the strategy also, because people say that there is a kind of like edge to every strategy. They stop sharing, they sell courses and like whatnot. So thank you for like actually sharing. It's quite interesting. I think we